Today we're going to talk about the retracement. This is very important. Now, timing the market is everything. Now, would you buy at the retracement or you wait at the support? Because whenever you buy, you got to buy at the retracement. The stock's going high and it retraces back. So this is what we're going to see today. In this video, I will break it down step by step using wheel chart and example so you can trade with confidence. So let's dive there. So now, what is a retracement? Those are the four things we're going to see today. We're going to see what is a retracement in trading. We're going to see the key characteristic of a retracement. We're going to see example of a retracement in an uptrend and how to trade a retracement. This is what we're going to see today. Now, let's get there. So what is a retracement? A retracement, as you can see there, is a temporary pullback in the price of an asset with a larger trend. For instance, we have a big trend. Remember, I told you it's going in an uptrend. So we have an uptrend. It's giving an uptrend. And it retraces or pull back. That's a pullback here. It's a larger trend. Most of the time, it's being used in a big, long uptrend or a downtrend. So it occurs when the price moves against the trend for a short period of time. So most of the time, you buy it when it's pulled back in a short period of time. So retracement are not trend reversal. They are minor correction with an existing trend. So they're not really a reversal. They just a pullback temporary. So for instance, as you can see there, in the uptrend, start going up and it retraces back. So that's his time you buy. It's moving up again and retrace back down there. And it moving higher and it retraces. Most of the time, the retracement you buy whenever you have a temporary pullback is keep the stock to move higher. It's moving back here, like I said, we call that a pullback temporary, and it's moving higher. Okay. Similarly, for the downtrend, we call that uptrend here, and then you can use it also in the downtrend. So we have a large downtrend, and it pulled back. That's the time you sell, and also retracement back here and pull back. It's moving lower. So for the uptrend, whenever you got a temporary pullback, it make the stock moving higher, and we got a temporary pullback here and move it higher. And for the downtrend, we have that. It's go down, and we have a retracement. We call that a temporary pullback. It is move lower. Temporary pullback and move lower. So most of the time, we use them in the uptrend or downtrend. As you can see there, we call that impulse, start moving high, impulse, and retrace back. So that is time you buy. So you always buy at what you call a BT, buy at the temporary pullback. We call it BT. So you buy at the temporary pullback or retracement, at the retracement. So it impulse and retrace. You buy there. Impulse and retrace. So stock going, the stock market always going up and down, up and down. So you always buy whenever it's retrace back. And move high, retrace, okay, temporary, move. That's as simple as it is. Moving high, retrace back. You buy at temporary, back, down. Moving higher, you buy there. Moving higher, you buy whenever it retraces. That's the way you do it. Impulse and retrace. Impulse and retrace buy. Impulse and retrace buy. That's the way. Now, we're going to see the key characteristic of a retracement. So, as I just told you, you always buy at the short term. It's a short-term price pullback. So don't worry. So stock moving, even though the stock moving higher, because the stock market never goes a straight line. It always retraces back. So you buy at the retracement. So it goes high and you retrace it. It retraces there, you buy there. It's moving. So that's why we call it short-term price pullback with a larger trend, big uptrend. It's okay. It occurs due to profit taking. I mean, most of the time, it's happened when people take profit. So, whenever the stock is going high, so people always sell at the top to take profit. People take profit. So that causes the stock going back down We call it pullback or retracement. So now you have a chance yourself to buy there at the retracement, because after the retracement, you take a whiff. Start never good. It's like you're whiffing. So when you're whiffing back down, that's the time you buy. And then you retrace back again. You're going up again, higher. So anytime start going back down, it has a chance to move higher in the retracement. So we call that temporary supply demand shifting. So price eventually resumes to the original trend. That means whenever it's going back down, it will resume higher. So common retracement level are identified. So most of the time, the retracement, you can really set up your short to buy at the level. So the most common level that's good to use, or indicators, you can use what you call a Fibonacci. So the Fibonacci has a level. That's a level you can identify to buy. You can buy at the 38.2. That's a Fibonacci. I'm going to show you what is a Fibonacci. I can show you that in a real short. You're going to see that in a moment. And you can buy at the 50 retracement or at the 61. That's the best level in a Fibonacci. 38, 50%, and 68%. So we're going to see that in a real shot. Now, until now, if you like this video, just do me a favor, just like, subscribe. Thank you for your time. Now, let's move. We're going to see that an example of a retracement in an uptrend. Price is up in an uptrend. So price is up, trending up. So whenever price is trading up, we call that bullish. Whenever price is trading down, we call that bearish. You know that. So it pulls back for a short period due to profit taken, as I just told you. So moving up, and it is going a little bit down here because people sell at the top. You know that. You always buy at the bottom and you sell at the top. So whenever it start getting in a level high, what you do, people that's been trading, they just sell, they take profit, and then you trace back, you have a chance yourself to buy, so they start moving higher. So it finds support at the key level, Fibonacci, as I just told you, 50, or a previous resistance trend. So most of the time, that can be used as a resistance or support. So the trend resumes, offering a buy opportunity, as I told you. So whenever the trend is resumed going back, that means it's going high, but it resumes back down. You take a break. So whenever it's taking break back down, you buy yourself, because it gives you opportunity. Buying, we call that buying. Because that buying opportunities. So it gives you a chance for you when it resumes back down for you to buy, because it's gonna going back higher. That's why, as you can see there, you got that a retracement here. So stock being impulse here is impulse, and it resume that. That's meaning you retrace back, you buy there, and it resume higher. We call that impulse, and it goes back down here. You buy there at the retracement or at the temporary pullback, and it's going higher. Anytime it's good back down, resume or temporary pullback, you buy, because it's gonna move higher. So you wait for the briefing. Went back down, you buy there. You can do it in an uptrend, most of the time in an uptrend, for the swing low or in an uptrend. That's the way it works. So the final tip I'm gonna give you in that, you're gonna see how to trade a retracement. I already told you, you use the first best thing that you can use to trade a retracement. For instance, you use Fibonacci level. I'm gonna show you what's the Fibonacci. You buy at the 38. Those are the best level to buy it in a retracement with Fibonacci, 38, 50, 61, 8 level. So also, another confirmation that you can get before you even buy, you don't really buy blindly. You buy at the Fibonacci first thing level. And secondly, you can buy to wait for a confirmation of the bullish candle. We call that a bullish engulfing candle. You wait for a bullish engulfing candle. Or you can wait for a hammer candle, or you can wait for a pimba. We call that a pimba. Pimbas can signal a reversal. So whenever you see the pullback going up and going back, you wait for a confirmation of the bullish engulfing, or you wait for a confirmation of a hammer, or you wait for a confirmation of a pimba. That's the best time to buy. And you can always, thirdly, you can always wait for you can check the volume to see if the volume is been increasing. So whenever you see volume increasing, that's the time to buy. A decrease in volume during the retracement signal a healthy pullback, while increasing volume may indicate a reversal. So when you see volume is increased in a pullback, that's a good time because it's going good time. So you can combine with other indicators. Fourth, lastly, you can combine with indicator like moving average. You have what you call the 50 moving average, and the 200 moving average can act as a dynamic for support and resistance. So all those things, you can combine them to make sure you buy with those levels. So whenever you see, you can use the retracement, you can combine the retracement with a Fibonacci, and you combine them with bullish engulfing. Those are the candles, hammer, pin bars, and then bullish engulfing. And also you can check volume, and also wait for, you can check with a moving average like 50-day or 200, whatever moving average that you want to put there. You can use it as a support and resistance. In the Fibonacci example I'm going to show you there, that's the Fibonacci screenshot. I put it for you. So stock been going high, stock going high, and it reaches back. You see, it reaches back at the level of Fibonacci. You can buy at this level too, the 23.23. So whenever you put your Fibonacci, you identify those levels in the Fibonacci. Whenever you see the stock, we trace back to that level 20.23, that's the best time to buy. And whenever it reaches back to that level also, 0.38, you see, it reaches back at that level, you buy. It reaches back at that level 0.5, you buy. It reaches back at that level 0.61, you buy, because those are the best level. And we have 78 also, that's on the level. Those are the best level to buy. 0.23, 0.38, 5, 61, 78. Those are the level you buy whenever you put your Fibonacci, and you identify those level whenever stock is retraced back. So that's the way. So stock been going high. That's a bonus. In the uptrend, we call that impulse, and then which is back. Impulse, which is back. You buy. Impulse, which is back. You buy. Impulse, which is back. Impulse, which is back. So start going higher. Whenever it start move high, it reaches back. Whenever it give you a temporary pullback, it's moving higher. And it reaches back again, you buy, and start moving higher. It reaches back again, stock is moving higher. It's like a higher, high, higher, high, 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 high. So we're gonna higher, low, high, high. So it's moving higher. Whenever it reaches back, it's moving higher. Now, I'm gonna show you something in the real short to see what can be done in the real short, just briefly before. Now, in the real short, as you can see there, stock been moving. You see that's an uptrend here. Let's just see something. And you see, stock be moving high. Whenever stock is moving higher, you give a chance to buy. It switches back here, for instance. So you buy. Whenever you buy at the retracement here, it has a chance to move higher. See, it's moving high, and it's going sideways, and it retraces back here. And we call that retracement because after stock being retraced, it has a chance to move higher. It's going to, we see the big candle is going high, and it's going to be sideways, and it's moved down there. Retracement, you go there, and then it's moved down there. You buy at the retracement, and so you always buy when the stock is moving down at the retracement. So you see, stock moving, you buy at the retracement here, and then what happened? You wait for the stock to move higher, and you wait for the retracement. You see, which is back here. You buy there. It's going higher. It's going to do, and then it's gonna go high, and we trace back down here. Now it's going a bit sideways, and stock going there. It's going down. Now it will trace back all the way down. So you can wait and buy again, and stock gonna go high. So you always buy at the retracement. Now let me see if I can add the Fibonacci for you. I'm gonna show you how the Fibonacci look in the chart. You click there. Let me see. You got the Fibonacci there. Let me see. Yeah. Okay. Let me go there. The Fibonacci. So how you place the Fibonacci? You can go from there. Let me see, you can place there, and you place your Fibonacci. See, those are the level I've been talking about. For instance, you got this level here. See, start being which is that's the best Fibonacci, that's the best level. You wait, that's 0.5. That's the level you buy. I'm just putting it there for you because you're not gonna show it that much, so you don't be confused. If you need to know more, we just post a class there. We have a class that's you show you how to trade in stock market. Everything is there step by step. Just click on the link down there and you can take this class. But just you see that Fibonacci, so that's the level. That's the best level. Whenever you see we start going high and we trace back at that level, 0.05, that's the best time you buy. And whenever you trace back to the 61, you see that those are the level